Welcome back. You're watching Big Deal, and with us we are joined by PUNEET, DALMIA, ANIL, SINGHVI, as well as VIKRAM, HOSANGADY, who are telling us what to expect from the deal street when it comes to the cement sector. All right, to the KPMG view that we promised, Mr. HOSANGADY, how do you see the entire consolidation going forward? Do you see enough action in the smaller cement players as well?
Yeah, so the current deals in play have been about 10 million tons, which would classify them as large deals. But we do expect activity in regional states, and these would typically be between 3 to 8 million tons. Will there be interest? Definitely there would be. There would be consolidation plays. Would it mean international players will come in? Maybe not, because I think most international players would like to bite plants of at least 8 to 10 million metric tons, and clearly small regional plays may not be attractive for them. Having said that, domestic players or even private equity players could potentially be buyers. In fact, we believe private equity players could be creating platforms that roll up some of these regional plays and then make a fairly sizable business for sale in the next 4 or 5 years.
All right, so many interesting trends that could be emerging. But Puneet, DALMIA, what do you think? How much is your company going to participate? Is it going to be active on the deal street?
Over the next 12 to 18 months, deleveraging considerations will play a very important role in further driving M&A activity. Banks still have many NPAs to handle, and I think steel, power, cement, these are three sectors where they have assets where debt is too high, and there could be potential opportunities driven by high debt.
All right, many opportunities in the offing. So, Mr. Singhvi, you know the industry in and out. More scope for deals, you think?
I think the consolidation has been going on. In fact, if you look at last 10 years, how cement industry has really evolved, there has been considerable consolidation. Today, when you look at UltraTech, it's almost 100 million tons plus if you include Century's cement asset, which are by and large in the same fold of Kumar Mangalam Birla. So there is a fairly good amount of consolidation. The first two players, that is Holcim, Lafarge and UltraTech put together, is about 50% of the cement capacity in India, which is fairly good. Now you have a very a clear situation where you have first two players holding almost about 50%. Then you have the second tier companies like DALMIA, Shree Cement and all that. Those are around 25 million tons. So I think there is a very good, if you look at 10-year perspective, I think there is a very, very subtle but definitely a right directional consolidation change which is happening in cement, and which augurs very well when you look at next 5 years how cement demand will really pan out versus what capacities which are there in pipeline. So the consolidation will definitely help cement players, the larger players, to take benefit of good demand, good capacities under their command, and sweating the assets. The important factor, Nisha, here is that the capacity utilization in the industry is just about 70-72%. I think it's likely to go up to 80-85%, which is what I believe is the peak of this. The industry hasn't seen a 90% capacity utilization ever, because there are many plants who have very inflated capacities. So I think when you look at the broader structure and frame of the cement industry, it looks very, very interesting.
All right, so that's an important outlook coming in on the cement industry, which will have its impact on deal street. But Mr. HOSANGADY, coming to you for the final take, now that we have seen so much interest in the cement industry and the assets here, some of the Indian guys have really warmed up. Now, do you think that some of them may be left high and dry, because everybody will not manage to buy and satiate their hunger for buying out these assets? So don't you think that Indian companies would be venturing overseas as well?
I think you make a good point. If you look at most of these groups today, they are looking at other emerging markets. In fact, if I look back 3-4 years back, many of these groups were very interested in Africa, the Middle East and Latin America. And there were situations where some of them had participated in bids. I think that's going to come back clearly. So I would imagine that countries in Africa, the Middle East, again, I think the recent strife has not helped the cause, but clearly, these are geographies that the groups you mentioned would be actively looking at in terms of asset plays.
All right, some important points made there. Thanks so much, gentlemen, for joining us and sharing all your views. So, to the important takeaways of this entire discussion. First, cement consolidation is here to stay. More clarity definitely required in the MMDR Act in terms of the transfer fees component. What is the estimated value of resources and who decides that? That needs more clarity for sure. Now, private equity players may pick small assets and create a larger cement platform, and that could be one real way of deal making going forward. Now, Indian companies, they are expected to venture even overseas to other emerging countries for more cement acquisition. And finally, capacity utilization is expected to improve in the cement sector. Therefore, also valuations will pick up because the infrastructure growth story looks intact at this point. All right, with that, net, what we have really concluded is that cement sector is expected to remain hot on the deal street, keeping all of us quite occupied. With that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.